Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 1st of March 2025, and happy St. David's Day for those living in Wales. And we're providing our regular weekly update for the week ending the 28th of February. Gold and silver reversed trend this past week, and we could see these metals under pressure in March. Why do we say this? Well, let's take a look. Gold fell $78 last week, falling from $2,937 to $2,859, having hit a high of $2,958 and a low of $2,833, a fall of 2.7%. Gold spread between high and low was $125, much higher than normal. Last week, we predicted gold would trade between $2,825 and $2,975, which it did, with 2,825 being in our low-end outlier range. In sterling terms, gold was down £46, closing at £2,282, and in euros it fell €62, closing at €2,755. Silver fell $1.30, falling from $32.54 to $31.24, having been as high as $32.85 and as low as $30.86, a fall of 4%. Difference between its high and low was $1.99. Last week we predicted silver would trade between $31 and $33.75, which it closed within, but did dip below $31 at one point by 14 cents. In sterling terms, silver fell 95 pence, just shy of a pound, closing at £24.87. And in euros it closed at 30.13 euros. That's down 1.03 euros. Gold to silver ratio went up from 90.3 to 1 to 91.5 to 1. Now, Bitcoin recovered slightly this morning, but is still down some $11,500 on the week at $85,000. Equities were mixed. The Dow Jones up 412 points at 43,840. The S&P 500 down 59 points at 5,954. And the Nasdaq Composite down 677 points at 18,847. FTSE Index up 150 points on the week at 8,809. Oils were marginally lower. Brent crude down $1.62 at $72.81. And WTI crude down 64 cents at $69.76. Dollar index closed up 1 point on the week at 107.61. Now, last week we saw some very interesting data coming out of the United States. Consumer confidence figures fell in February from 105.3 to 98.3, signaling a potential pullback in spending and dampening the inflation outlook. US GDP growth slowed from 3.1% in quarter 3 of 2024 to 2.3% in quarter 4. The core PCE price index, inflation in other words, rose 2.6% year-on-year in January, down from 2.9% in December. We did expect that figure to be slightly higher. Perhaps it will be in next month's figures. Softer inflation bolstered expectations for multiple Fed rate cuts, which is why we saw a modest recovery in equity prices on Friday, in spite of the rather controversial meeting between President Trump and President Zelensky of Ukraine. Now, although multiple rate cuts would lower borrowing costs, potentially boosting corporate earnings, we're still skeptical that with the advent of the proposed tariffs due on the 4th of March against various countries, we would see much further lowering of inflation in the months ahead. We are doubtful that that will happen. Regardless of what President Trump continues to say, importers and domestic consumers pay the tariffs, not the exporting countries. The exporting countries may face a reduction in demand when their products become more expensive, but they do not physically pay the tariffs, unless they decide to take the hit themselves, which most exporters don't, unless it's a very, very small figure. Now, this coming week, we have further important data coming out of the United States. Monday, we have the final manufacturing PMIs for February. Wednesday, the final services PMIs for Feb, and the ADP employment report, expected to report 143,000 new jobs. Then on Friday, we have the big employment report, the US, or traditionally called the non-farm payrolls, and that is expected to report 160,000 new jobs for February, with the unemployment rate expected to rise from 4 to 4.1%, and hourly wages to drop from 0.5% to 0.3%. We shall look at these very closely in next weekend's update. So once again, the latter half of the week could produce some significant moves in prices. That said, at the moment, the geopolitical situation and Trump's battle against a number of other countries are dominating the headlines and potentially the market sentiment. Last week, we saw gold move into a bearish trend or retracement, and we now find support levels at $2,813 and beneath that $2,769, which is where the 50-day moving average lies. This is if you're one of these technical analysts. There is resistance at 2,896, in other words, just below 2,900, which is where the 20-day moving average lies. Silver is trying to settle around the 50-day moving average, but is struggling. It's possible we could see a fall to $30.92, and if that breaks down to as low as $29.75, there is quite strong resistance at $32.35, but if that is breached to the upside, silver could advance to $33.50 before hitting very strong resistance. But we're not expecting that this coming week. Now, last week we stated, quote, we're a little more concerned about silver. If tariffs are strong and pervasive, then global trade will diminish, and this could have a detrimental effect, especially short term, on silver, unquote. Well, the 4% fall in silver prices compared with gold's 2.7% fall may indeed be the start of that forecast. Unless the political rhetoric changes, especially surrounding tariffs, precious metals could be under pressure, and perhaps only the prospect of lower rates can save gold and silver from falling much further. There is much in the melting pot to consider regarding forecasting precious metals into March, especially when considering that based on historical data, the worst 3 months for gold and silver prices over the past 10 years are generally considered to be March, April and May. This is because these months often see a seasonal dip in precious metal prices, with March historically showing the most significant decline. Let's see if it happens again this year. With this in mind, we forecast gold to trade between $2,775 and $2,925, with $2,750 and $2,950 as outliers. Silver we expect to trade between $30.25 and $32.50, with $29.75 and $33 as outliers. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give us a thumbs up, subscribe, press the bell sign, pop on over to our sister channel and subscribe there. And as always, we hope and trust you'll have a prosperous week ahead.